Hello, everyone. Welcome to the Dr. Ini Adesina show. I hope my sound is fantastic because I know that sometimes there's echoes. So hopefully, you're hearing me well. Let's make sure that it's, yep. So I'm hopefully that, I'm now becoming a tech, trying to do well in tech, right? So just wanted to say, welcome to the Dr. Ini Adesina show. Very excited to be here, always excited to be here. So I'm just, thanking everyone that has complimented, commented, and, all those good stuff. And I know that, this evening you could be somewhere else, but happy to have you here. So those that are here for the first time, this is a show where I share resources for small and medium-sized enterprises, or you can say small or medium-sized businesses. I try my best to provide resources. Of course, you have to still consult with a professional because this information is it's just informative. This show is informative. And so I might advise everyone that listens to please consult with a professional. And of course, we're always there. You can come to my firm and I'll just help you out. And so I'm just excited again to be here. And okay, let's just get started. Today, I have another interesting topic. I actually decided to do a show on this topic because I've had questions here and there, and I know someone might be wondering, why the importance of this topic. But those that are here in the US that have dealt with S corporations, I believe that this is for you. And if you're thinking of becoming an S corp, your entity, of course, to be if you're thinking of changing the start of your entity to become an S corporation, it's good for you to hear this. Now, my topic today is reasonable compensation S corporation. All right, or should I say reasonable compensation for S corporation shareholders. We know that an S corporation, or those that don't know, an S corporation is what? A tax structure. It's not, you cannot go to a state and say, you know what, I want to register and become an S corp. No, you have to start with an LLC or a PA or professional corporation or PC or a corporation, and then you can elect to be an S corporation, right? The beauty of an S corporation is that unlike other pass-through entities, an S corporation is a pass-through entity. What does that mean? It means that you can actually, you will not pay taxes on the S corporation's, net income, but it will flow through. It will flow through to your shareholders, right? The income will flow through to your shareholders, right? So, or the shareholders of the S corporation, right? So it's a pass through. It just passes through to the shareholders. Now, the beautiful thing with an S corp is that you can actually pay shareholders salaries. Beautiful, because other pass-through entities don't work like that. You have to actually you cannot pay shareholders a salary. Of course, for partnerships, we have guaranteed payments, but I'm not talking about that. I'm actually talking about wages and compensation, wages, right? Salary, excuse me. And so I decided to talk about reasonable compensation because, as much as an S corp is a pass-through entity, it means that any money that is passed through to the shareholders, like for a pass-through, you make a net profit, and then you pay the shareholder, or the shareholders get let's say a K1. I really don't want to get too technical, but those that know, but if you don't know what's a K1, it means that, okay, let's say the company makes 100,000 net profit, 100,000, and you have two shareholders, 50% ownership, right? The shareholders will receive $50,000 each. And that's a distribution, all right? Because net 100,000 divided by 2 is 50,000, right? Or if you're the only shareholder, the net profit, you receive the whole 100,000 as the only shareholder, right? Which is great. There's no payroll taxes, all right? But as an S corp employee, owner employer or employee, you have to pay yourself a salary. And like, like all salaries, right? Most salaries or salaries generally, you have to pay payroll taxes on salaries. So, I mean, even though there are some people that we are exempt, but there are certain taxes you have to pay on payroll taxes. And so because wages, right, have payroll taxes. And the example I gave you, the 50,000 each, for example, right, there's no payroll taxes on that amount. A lot of people pay themselves, right, a little amount or small amount, very minimal amount in salaries so that they don't have to pay payroll taxes, and they give themselves a big chunk in distribution, right? So IRS, which is, the governing body here, the Internal Revenue Service, said, no, you have to pay yourself reasonable compensation, right? If you're a CEO of the company, you have to pay reasonable compensation. Now, there are many factors, and we're going to look at these factors, right? Not that we can say, okay, yeah, I'm a CEO, but I'm not a CEO of a big multinational company. So what do you mean by reasonable compensation? We'll get into that. And that's what I wanted to speak about, the factors. But I just want to emphasize that if you're not taking a reasonable compensation, that means a salary, you're not compensating yourself for services provided to the company, there actually can be a problem, right? There can be a problem because when I say there's a problem, this is how the problem can occur. I gave you the example. You have a net profit of 100,000, right? And you pay, maybe you guys, two people, shareholders, maybe it's 50-50, and each of them get 50-50, right? And let's say they said, okay, for the purpose of this, because we don't want to pay ourselves so much in salary, we're paying ourselves 10,000. Remember that 10,000 are expenses, so it was already taken care of. Maybe you pay each other 10,000, and that's 20,000. It's part of the expenses. So net of those expenses, including all the expenses that you have for the company, you get 100,000, right? Then 50,000 goes to shareholder A. Now 50,000 goes to shareholder B, right? This is just illustration purposes. Now, of course, I mean, when people that go through try to circumvent this reasonable compensation, sometimes you see people having net profit of maybe, let's just make it maybe even 800,000. Let's make it, 800,000 and 50%, or even it's one person, the net profit, and they pay themselves 800,000, that the distribution is not paid. They distribute 800,000 to themselves, right? But the salary might be 20,000. You see what I mean? Remember that 20,000 has been taken into consideration before the 800,000 net profit. So what happens? IRS will say, but why are they paying you? Why are you paying yourself 10,000? Of course, we know why. Because that person wants to escape payroll taxes. Payroll taxes doesn't apply to the distribution, to that 800,000, but it applies to the salary that was paid to the shareholder, right? And so people just look for an amount and really reduce the amount in salary. So IRS said, no, your compensation must be reasonable. Now, I said that this could be an issue because, for example, let's say you are a, let me see, I mean, you're a CEO of a company, right? Or maybe, you're a CEO of a company, you're an owner of the company and a medium or small size company. And yes, just like the example I gave, the net profit after all the expenses, including your $10,000 salary, becomes 800,000. And you just said, oh, I have that distribution, and so there's no payroll taxes. IRS has the right to come and investigate and say, you're paying yourself 10,000, but you have a distribution of 800,000. You're collecting 800,000 from the net profit. So they have a right to look at certain factors to say, this is not reasonable compensation. And so what they do, they'll look at the reasonable compensation based on the factors. I'm going to give you some of the factors. And they will reclassify that amount as a salary. And you know what happens? They won't come, I mean, they don't usually come the first year or second year. They come later on. And remember, if you're owing the government taxes, what happens? Payroll taxes or any taxes at all, what happens? What happens to that? Yep. You have penalties and interest. So, I mean, you're trying to circumvent and say, oh, you know what? I don't want to pay myself so much in payroll so that I don't have to pay so much in taxes, payroll taxes. But you know what? If IRS comes and finds out that your salary is so small, based on certain factors, which I'm going to go into, you know what happens? They will change it, change that distribution into a salary, and then they'll backdate it from the date you're supposed to pay, and then interest and penalty will apply, right? There are court cases. I mean, I'm not an attorney, but I mean, for my profession, I have to look at tax court cases because, it's part of what we do when it comes to analysis. But, we're not attorneys. I mean, I have my background with the master's in tax, which I have to always go back and see what does the tax law say for application purposes, not because I'm an attorney. All right. Okay. So let's look at some of these factors, right? Remember, I gave you that example. One of the factors that the IRS looks at is training and experience. All right. And they see that, oh, yes, you've worked in this position for some time. You have the knowledge base and you have a lot of experience and you end up paying yourself $10,000 per annum, right? That is a red flag, all right? So one of the things IRS looks at is your training and experience, right? You might be a CEO that has worked in this entity for some years. You have that kind of experience. You've been trained very well. And then they said, why, what's happening here? There might be, I mean, I've seen someone that the salary is even not even, I mean, the salary, they're trying to get a reasonable, and I'm always trying to I always tell my clients that, I am I am very strict on trying to make sure that if ever they get audited, they are good, right? And when I say they are good, that they have dotted their I's and crossed their T's. You can't, if somebody or if the IRS comes and says, oh, this is not reasonable compensation, and you're paying yourself $10,000 and your net profit is $800,000 and you have real good training and experience. I mean, $10,000 is ridiculous, but I'm telling you that people pay, there are ridiculous amount out there when it comes to, people that want to circumvent payroll taxes they don't want to pay, right? So it looks training and experience, all right? Another factor is duties and responsibilities. Now, when we look at this, you say, okay, you are CEO of the company, because remember, we're talking about owner-employee, all right? And you're running the business, you are managing the business, you're doing everything, making sure the business is working well, doing well. I mean, you're making good money, the business is making good money, right? And then you pay you're paying yourself that ridiculous amount of money. I'm actually using that example. It could be some people make millions of dollars and they pay themselves 20, 30, not 10, 20, 30,000, right? And really, that's a problem because your duties and responsibility is even more than that amount. So IRS looks at duties and responsibility. What is it that you're doing, right? And then, of course, the time and effort devoted to the business. All right. So what are you? Is it a part-time business? Is it you do a couple of hours? Or are you a full-time? Is that your full-time? Now, yes, I know some people that before they get into the business fully, they do it part-time. They do it part-time. They do it part-time and they have a W-2 job, right? Or a job that they get a salary from, right? So they have so that's one of the things that they look at, right? Various things like they look at how much time do you put in, right? Now, somebody might put in, even though the person has an S corp, the person might put in just a couple of hours a week. So, it's not really exactly the amount, but you look at how many hours the person puts in a week, right? And that's one of the factors, how many hours, all right? Now, another thing that the IRS might look at is the dividend history. What has been happening in the past? Was there anything like that? I know somebody might say that there's an S corp, but I don't want to really expand on that, but just understand that, IRS looks at those are one of the factors, right? Now, another factor is payment to non-shareholder employees. So what does this mean? It's like, now, you are the CEO and you have somebody else working as a manager. The person is doing the job and the person is actually being paid more than you as a CEO, right? So does that really make sense? If the person is not even a shareholder of the company, but it's the responsibility is similar to yours, or even not as much as you as the CEO of the company. So the question here is that reasonable? Is the compensation reasonable? All right. Is that compensation reasonable? Because you are just getting 10,000, for example. I'm going back to my example, and the non-shareholder person that is an employer is getting 10,000. I'm sorry, maybe could be 5 times more than you, right? And this is because remember, an employee would not stay in your company if you don't pay them the market rate, unless sometimes they stay for different reasons. All right. The next is timing and manner of paying bonuses to key people. Now, I know that a lot of times, I'm going to go through the list and some of the things that IRS looks at. Of course, the list is not exhaustive. There's different is case by case situations, but I'm reading out this list and trying to explain to everyone that is listening or watching this program, because a lot of people get into big trouble because of not paying reasonable compensation, right? Now, you have key employees in your company. How is it that they are being paid? How are they receiving bonuses, right? As compared to you, that is the CEO of the company. Remember, we're talking about owner-employee. Now, because as the CEO of the company, you have to pay yourself a salary, because that's how the S Corp structure works. But we're looking at, is that salary reasonable? All right. Okay. Another pointer that IRS looks at is look at what other businesses pay. Now, for example, my practice, I'm CPA firm. I have a CPA firm, which I'm president and CEO, and we look at it in that case and say, okay, what other CPA firms? What is it that is being paid? What are the CEOs being paid? Right? There are so many factors that come to play, right? There are so many factors. There's an example I've given, maybe not here, but I remember that I mentioned that if somebody's living in a state with a higher standard, higher cost of living, not standard, cost of living, and you have two classmates that they graduated from the same school, and they have the similar qualifications, and if it's designations to the same thing, and at the end of the day, one is living in a high cost, or a place that has a high cost of living, a state compared to another state that has a lower cost of living. Now, of course, the IRS will not compare those two, businesses. They would likely factor in that, okay, these people, the similar comparable businesses, definitely would be in the same geographical location. It doesn't make, it's not right, I would say, for someone to compare maybe a medical practice in a state that has a high cost of living, to another state that has a low cost of living. So that's when I say comparable businesses, right? So it's not just, okay, the business is the same business. It's actually, where does this business, where does it, is it located? All right. So that is one of the things that the IRS would look at. Then, of course, compensation agreements. What is the agreement that you, as the business owner? Now, I know it's weird when we say this, or when when I say this, but yeah, I know that you might say, but you're the owner of the company. What is the compensation agreement? Yeah, I know it looks weird, right? But compensation agreement, you have to have a compensation agreement with the entity, right? And so those are the things that IRS looks at, right? And of course, there are other formulas that can be used to determine compensation. right? I know that I know I was speaking somewhere and somebody says we use a percentage of net profit. Somebody says we use, depending, there was the different rules that people use, to say, okay, how is it that, how do we set this and know the exact amount that we're going to pay? Now, I know that these factors are non-exhaustive. I mean, I know the IRS would look at case by case basis, but it's very important. Now, you might say that, okay, but how about if it's really, I'm actually paying myself, it's low, but it's really, I'm seeing it as reasonable compensation. Well, the burden of proof is on who? The taxpayer. You have to prove and say, okay, yeah, that's fine. I'm paying reasonable compensation to myself, and this is why, and there are certain factors that you put in place that, or you show that this is why this is being paid. Now, I would say, I would continue to emphasize that before you set is a salary, owner employee salary for yourself, work with your CPA. If you don't have a CPA, of course, yours truly is right here. Of course, you can actually reach out and let's see how we can help you, because it's better safe than sorry. You don't want to be in a position that you get audited, and then at the end of the day you find out that oh my goodness, I didn't know that I was paying myself below the amount that is for reasonable compensation. An S corp structure is a very great, beautiful structure. Of course, I mean, not everybody can be, not every entity can be an S corporation because of certain restrictions. But the beautiful thing about an S corp structure is that it's a pass-through entity. I mean, and you can also pay yourself a salary. Many, in fact, apart from an S corp, pass-through entities are not, owners of pass-through entities are not allowed to pay themselves a salary. Just know that we have to, please note that you cannot pay yourself a salary. But the beautiful thing is that the S corp structure, you can pay yourself a salary. Of course, as I said, people try to get around that and say, okay, I don't really have to pay myself a reasonable compensation. And that's why I'm saying that. I know somebody asked me, I think either it's last week or the week before, and they were asking me that the person was asking that, what about if I don't really make money? What about if I don't really make money? Do I have to worry about reasonable compensation? No, if you don't really make money, if there's, when I say really make, depends on what is really make. What are you saying the really make? Really make, if you're making a certain amount of money, I mean, and certain, of course, as I said, I mean, one has to analyze and see what is really a certain amount of money, right? I mean, I don't want to go, I mean, give you a figure, but I would just say that it's very important for you to understand what it is. What do you mean by certain amount, right? Or what do you mean that if you're not making money? Now, if somebody is not really making money, that's a different ball game. You're not really making money. What does that mean, really? Are you making a loss, or what is it? But I mean, so that's why I said this is for informative and educative purposes only. I will not really get deep in it. I just want to make sure that we understand that, that there's reasonable compensation that has to be, every business owner has to understand what it means to have reasonable compensation. All right. It's very, very important, right? Because of the penalties and interest that can apply. Now, if you're not certain, if you're saying, okay, I've been paying myself this amount of salary for a couple of years, it doesn't mean that you're good to go. If they haven't audited you, it doesn't mean. It's good for you to know this so that you can actually sit with a professional and say, okay, over the years, I've not been paying myself a salary. Over the years, I've been paying myself a salary, but I'm not sure if I'm paying it correctly. Yes, I'm not really sure if that's correct, if I'm paying myself the right amount of salary. And so the issue here is that you want to make sure that, the salary that is being paid is actually reasonable, right? Again, you want to avoid any penalty, interest, and all those accumulated interest that is compounded that can occur. All right. So please sit with your CPA and find out if you're actually doing the right thing, you're paying yourself the right amount. If you are, please, kudos. But if you have some doubts, right, there's nothing wrong with starting now to just correct that amount and get that situated. All right. Okay, excellent. All right. So yeah, and then as I noted, or I've said, I believe I said this, but just in case I did not, IRS can actually reclassify an amount. Let's say, as I said, let's use my example. Let's say that you are paying yourself $10,000 and the net profit is 800,000, for example, and you're the only shareholder. You get the distribution coming to you, $800,000, and that amount is taxed on your personal tax return. IRS can say, okay, I'm looking at you based on these factors. You're not supposed to be paid $10,000. You're supposed to be paid maybe 150 or $200,000. So what happens? IRS can come and say, you know what, that amount that is your distribution that's distributed to you, we're going to be classified, turn around, and you've already paid yourself 10,000. We're going to change that 10,000 to 200,000 by further deducting 190,000, right? So you would have to pay taxes on what, instead of paying 10,000, you have to pay payroll taxes on that 200,000, right? The 190,000 that IRS now removed it from the 800,000 and applies to your taxes, to your payroll taxes, right? And of course, remember, penalties, interest, all those stuff that are not good stuff will be added, right? And of course, if it's something that they're going back 3 years, or no, the statute of limitation, so a couple of years, maybe 2 years or so, the statute of limitation depends on when the taxes are filed, or other criteria, which I'm not going to go into right now, but just, let's say 2 years, right? And they find out that, okay, you didn't do that well, you're going to be charged. Penalties and interest will happen. All right. All right. So let me go to the questions. All right. Now I believe I should have a show on this. So the question is, I feel like my business has hit a plateau. What changes do I need to make to fix that? Now, plateau means that your business is not growing anymore. You reach a certain level and you want to move, you want to do something. Well, there's several things you can do. I believe I'm going to note it there. I should get that as the next topic, so that, it's not just one topic. I can get that right. It's more than just speaking and answering the question in 2-3 minutes, or a minute. There are a lot of things. First of all, I would say that it could be maybe marketing strategy. It could be issues with your product. It could be issues with your branding. It could be issues with diversification. Could be, all kinds of issues, right? And so I'm going to note it there, that I have that as my next topic. I'll have to note it there so that I remember that will be my next topic, right? So I advise you to please listen and just look at what you can do. Of course, as I said, this is for informative and educative purposes only, but it's very important for you to, know, and just so you'll be able to see what you can do to move your business to another level. I know that you might be going through the motions, something that you have done over and over again, for a couple of years. This is a time that you have to sit back and say, okay, these are some changes that I have to make. And so, it could be any kind of factor, anything. Now, it's also important that I would say that you work with a professional, because for us, we would go through every pointer and say, okay, where are you? What are you doing? What can you do differently? So I'm going to really go in depth and discuss this. And then I would say that even as I discuss this, or in my next show, it's very important for you to do your best to work with a professional, right? Because what I'll give on this platform is for informative and educative purposes only. It's important for me to know what you're going through exactly. What is it where you are, what you've been doing, and then we can move forward. All right. The second question is I have to fire my staff. Is there any way around this? Oh my goodness, this is how will I this is not a nice thing that you have to do. But I would say, is there any way around this? Well, you could talk it. Well, it depends. Are you firing your staff because of inefficiency? Why are you firing your staff, right? I hope you have watched my show on how to retain staff. So firing, I mean, could it be you're trying to reduce costs? Now, if the person is really, I mean, like, is not efficient in the person's work, I get it. I understand that. I know it's not a nice thing to do. I know it's a hard thing to do. But if this person is efficient, maybe there's downtime. I would say what about moving the person around in a different department, maybe looking at the person's strengths and seeing how you can move the person from one department to another. If the person is still very effective, or you want to reduce expenses. Look, if you want to reduce expenses, you might say, okay, maybe is there anything that you can actually reduce in your operating expenses? But if you do have to fire your staff, I would say that, be nice, be nice. A lot of times, and of course, be nice and be careful. Why I'm saying be careful. If your staff is working on your computer, make sure that everything is not, I mean, everything's locked out. You're not having the person doesn't have access to send emails to your customer, your client. So that is very, very important. But be just nice about it. You could be talking to your client that this is what is the issue. This is what that's why I have to let you go. I mean, and then if the staff this person is good, but you just that you don't have the work for the person. I mean, the person is good. There's nothing wrong with recommending this person to someone or you can tell the person that, what, I'm your reference wherever you find a job, be nice about it, right? Be nice about it, but also protect your company. Make sure that, you are logging everything out and making sure that the customer doesn't have access, or, your staff cannot send, emails out or anything like that, right? With the office email. All right. So again, I would say that, first of all, ask yourself, do you really need to fire this staff? Is there any way, ask yourself, if it's yes, then, well, you have to go ahead. But if there are other ways, like reducing expenses or, moving the staff to another department, then do that. But if you have to fire, then, well, then sadly, then you have to go about it, right? And of course, go about it well and properly. And now, make sure also that when you're actually bringing your staff on board from the beginning, you've already dotted your I's, crossed your T's, have all the signatures, everything, background checks, everything done. Okay, make sure that before, so that this staff will not end up suing you. So make sure everything is in place, staff handbook, everything is in place. All right, it's very important for you to understand that. All right, and of course, what the person is supposed to do, make sure, because I'm saying these things because to get to this stage, if maybe this one is fine, but hopefully you don't have to fire going forward, but is make sure that you actually do the needful for bringing on any staff. All right. So the third question is, I know I have a great product, but my marketing strategy sucks. What do I need to do? Just a heads up, I can't afford a big marketing budget. All right. I hear you, and this is something that is not strange for small and medium-sized enterprises. I've seen people that say, oh, they give 30% to the budget, millions of dollars to marketing budget, and I get it. I know SMEs do their best to actually use their limited resources to do so much. But if you're looking at a marketing strategy, you're saying that the marketing strategy sucks, okay? I would say, number one, go back to the drawing board and see why does it suck. Go back and see what's wrong with it. That's number one, because maybe you're not doing putting the correct strategy in place. I would also say look for outsourced marketing consultant, people that can help you. Outsource is very important to use those resources, because having a marketing manager is very expensive. Like you said, you have limited resources, and I hear that. But there are people that say, you know what, I can actually work with you here and there, and come up with a strategy. Okay. I can't afford, you say you can't afford, okay, that's fine. Another thing you can look at, if you have watched my show on organic marketing, that's something you can look at. I talked about organic marketing. I've talked about marketing in general. That's something you can look at. Networking, another area you can look at. Social media is so cheap, right? But you have to use social media in the right way. You have to just make sure that you're not just getting out there and putting things out there without really understanding your target market, understanding how to, put out your product there, understanding your branding. You have to look at that and see. So I would say, please sit back and look at, okay, what is it that you're doing wrong? And of course, we don't handle marketing, so I wouldn't say that, you can come and use our services, but I do a lot of outsourcing as a CPA for people that are looking for CPAs. I think outsourcing helps a lot of SMEs, because it's a way that we CPAs can, or any of professionals, right? For a CPA, sometimes you don't need someone most SMEs don't really need a full-time CPA on staff. So, I mean, our firm, right, actually charges a flat fee, a monthly flat fee for those that want to do retainer agreements with us. And with that, we clarify things. We have, issues and meetings and things like that to make sure that to make sure our client is actually, thriving instead of surviving. So you can look at people in the marketing field that can actually come up with a marketing strategy to make sure that things work out very well in that aspect. From what I'm seeing, a lot of times that we business owners, we want to wear many hats. Well, you can try, but sometimes when you're faced with not knowing, it's very important for you to have a professional to call and ask questions. It really makes a huge difference. All right. So I would say that talk to a professional, look at organic marketing. But before you even look at organic and networking, and it's good for you to find out what is it that you're doing that is incorrect, right? What is it that you need to boost, right? And it could be that but you've said, I have a great product. You're right, that's good. Because one thing I know, that no matter how great your product is, if it's not out there, if people don't know of that product, then it's not going to work. You're not going to make money. You're not going to sell the product, right? So it's very important for you to note that. All right. Okay. So the last question, I believe, or maybe we can take something else, but I'm an event planner. Any tips on diversifying to increase revenue? Okay. I know I've spoken about diversification before, but let me zero it in or down, or let me look at an event planner. One of the things that you can do when you're planning events, you can actually look at advertising. I don't know if you've been able to get, advertising. Make sure you can have the programs, not just a program on a sheet of paper. You can have a program that people can pay for advertise. They can pay to advertise on the program. That's that's one of the things. And also, you can find out if maybe merch, right? Something like that. Merchandising could be an area that you can actually benefit from event planning. Now, event planner, you can actually also, as an event planner, ask the people using your services, if you can also go into you know, they can also add items that it could be anything, souvenirs, anything that can actually bring in revenue. All right. I know some event planners actually expand into other areas for that can complement the event, right? Some event planners actually, um, you know, um, either they add catering or they liaise with people that cater, right? All right. Some of them actually have somebody on their team that is a photographer, or they liaise with that, right? Somebody can do that. Somebody can have a team, because an event planner can actually have different areas of planning. They could have an event planner, can have someone they have a marketing, sorry, not a makeup section. An event planner can have, yeah, if photo put art and maybe photography, something like that, picture taking, so many ways that you can actually diversify. There's so many ways. And then I also remind you that, of course, if you want, we could break it down, but I would have to look and see and do some kind of analysis and look at so many areas where you can really diversify that will not be so taxing on you. So you can look at that. But I would feel that as an event planner, you should have your own team. Should have your team, a DJ, you have a team that is an MC at the team. These people can actually work under the event planning umbrella, right? You can get people to work with you, an event planning umbrella, and you know how that would work when it comes to your event. And I know one thing I know about people that are planning or that want to have an event, they want an easy life. they want they want something that is, personally, I know that easy life means one-stop shop. I would something that you go and you have everything. You have everything at once, one-stop shop, right? You have everything and everyone, whatever you need. So imagine you are an event planner, you have everything plus everyone that is attached to you as an event planner, because of based on your needs, the DJ, everything that you need in one stop. So I believe that people pay for convenience. People pay more for convenience, right? They are not ready to, talk to this. No. If you have an event planner and the event planner actually that not the, or let me talk, no, the event planner has specific people working with that, with you as an event planner, in different areas, so that at the end of the day, it's a one-stop shop. That would be amazing, right? So, of course, I would have to go through everything, look at how that would work and analyze to say, of course, if you really want to know more, I would say that it's important that one will analyze and say, okay, what is it? How would that work for your event planning company? All right. So again, very nice to be here today. This evening, morning, afternoon, wherever you are. Beautiful to be here today. Just to make sure that if you have questions, you have you want to clarify things for your company. The goal is to provide resources to make your business thrive. And of course, this is for informative and educative purposes only. If you have specific questions, please don't hesitate. That's my website, driniadesanya.com. Let me see if you can really see that. Yes, driniadesanya, and that's dot. Let me see. Yep, let me see. Yeah, and .com. Hope that's so that you can actually go there and it will link you to the firm website, and you can actually book an appointment. All right. So just to remind everyone, to make sure that you are thriving, you have to be intentional. You don't want a company that is just surviving. You want to thrive. So see you next time. Have a good one. Bye for now. And again, thank you for being here. I know you could be somewhere else.